Imagine a world where AI isn't just, you know, recommending what to watch next, but actually keeping trains running safely and efficiently.
Very cool.
That's the world. Duos Technologies Group, Inc.
Oh, right. DUOT.
DUOT, as they're known on the stock market, is building.
Yeah, sounds interesting.
And hey, before we go any further, make sure to hit that subscribe button so you don't miss our future deep dives into fascinating companies and industries.
Definitely do that.
Okay, so today we're taking a deep dive into DUOT,
All right.
a company that's using AI and machine vision to really try to revolutionize the rail industry.
Cool.
We'll unpack their business model, their financials, and even kind of take a look at what the market thinks.
Okay.
You'll come away with, I hope, a solid understanding of the company
All right.
and whether it might be worth, keeping an eye on it.
So you've given me some interesting stuff about DUOT.
Yeah.
And it seems like their core business is all about designing, developing, and operating intelligent tech solutions for the rail industry.
So they're not just dipping their toes in the water here. They're really trying to be a major player.
Yeah, absolutely. And it's interesting their emphasis on automated railcar inspections using AI and machine vision.
Oh, okay.
Kind of like a really high-tech automated way to spot little problems, tiny defects that could turn into big problems later.
Yeah, that makes sense, especially when you think about safety in the rail industry.
Exactly. Safety is huge. And the rail industry is a crucial part of transportation and logistics. And they need these innovations.
So DOT is in a good spot then, a market that's ripe for this kind of disruption.
Yeah, I think so.
But how do they stand out? What makes them unique?
Well, from the research you gave me, it seems like there's a few key advantages.
Okay.
First, their expertise in AI and machine vision gives them a real edge when it comes to these automated railcar inspections.
So they're not just riding the AI hype wave. They're actually,
They're leading the charge.
Yeah.
And then they have this growing patent portfolio. Some really innovative technologies like oblique view.
I've heard of that.
Yeah. It allows them to inspect the undercarriage of the rail cars.
Oh, wow.
Which is usually hidden and a really big deal for safety.
So they're giving these rail operators the ability to see things they never could before.
Exactly. And to see those really subtle things from difficult angles gives them a real advantage.
So it's not just about meeting standards. They're actually setting new ones.
Yeah, I think so.
But it's not just about the tech itself, right? It's about how it integrates into what's already there.
Absolutely. They do a great job of kind of weaving their solutions into existing platforms.
Right.
They understand that for their tech to be valuable, it needs to work within those systems that operators are already using.
So they're playing nice with the big players.
Yeah, which is smart in an industry like this.
Right.
And to top it off, they have these partnerships with giants like Dell and NVIDIA.
Oh, wow.
This really enhances their credibility and gives them access to some really cutting-edge resources.
Makes sense. Win-win.
Yeah, definitely a win-win.
Okay, so they've got the tech, the partnerships, and they're in a market that seems ready for what they offer.
Yeah.
But what about the people behind the company?
Right, the leadership.
Yeah. What kind of leadership is driving this thing forward?
Well, from what I've seen, they have a really interesting mix of experience on their leadership team.
Okay.
Like Chuck Ferry, the CEO.
Yeah.
He has over 35 years of leadership experience, including time in the military.
Wow.
He's even received a Bronze Star and a Silver Star medal.
That's impressive.
So, a proven track record.
He's been tested for sure.
And then there's Adrian Goldfarb, the CFO. He's got a long history with the company and in the tech industry.
Okay.
And their board even includes some real rail veterans.
Oh, wow.
Like a former CFO of a major rail operator.
Really?
It seems like they understand that balance between tech and operations is crucial.
Yeah, that makes a lot of sense.
They seem committed to keeping investors informed, too.
That's good.
Lots of press releases and earnings calls.
All right, well, it seems like they've got a good team.
Yeah.
But how are they actually using their resources? Let's talk financials.
Okay, well, the information you gave me paints kind of a mixed picture.
All right.
Their financial performance has been up and down.
Really?
Yeah, kind of a roller coaster in terms of revenue and profitability.
Okay.
Which, can make investors a little nervous.
Yeah, for sure.
Like in Q3 of 2024, they had this huge 112% revenue jump year over year.
112%.
Wow.
Yeah.
But then their 9-month revenue for that same year actually decreased from the year before.
Oh, so it's not all sunshine and roses.
No, not exactly. It's like they're still figuring out how to turn their great tech into consistent financial success.
Yeah, they got to find a way to smooth things out.
And there are a few other things that kind of raise some questions.
Like what?
Well, their debt is pretty high and their free cash flow is negative,
Oh, that's not good.
meaning they're spending more than they're bringing in,
Right.
which isn't sustainable long term.
So some red flags there.
Yeah, and they also have a negative price-to-earnings ratio.
Oh.
So all of that together paints a picture of financial instability.
Okay, so they need to work on that for sure.
Yeah, if they want to attract and keep investors.
Okay, well, we've covered their business model, their leadership, and their financials.
Yeah, we have.
Seems like a good spot to pause for a second.
Right.
To our listeners, don't forget all the sources for this deep dive are linked in the description.
Definitely check those out.
And while you're there, let us know what stock you'd like us to deep dive into next.
Yeah, we'd love to hear from you guys.
All right.
What do you want to talk about?
So let's get back to DUOT.
Okay.
And despite those financial question marks,
Right.
the market seems to have kind of a mixed opinion about them.
Yeah, it's interesting. So what are the analysts saying?
Yeah. Are they bullish, bearish, or somewhere in between?
Well, they seem to be leaning towards optimism.
Oh, okay.
They've given DUOT a price target that suggests there's some good upside potential.
Interesting.
But of course, these are just predictions.
Right, they're not guarantees.
Exactly. They're based on models and assumptions, and the company could perform differently.
Yeah, sometimes those predictions can be way off.
Absolutely. So while it's good to see some positive sentiment from the analysts, we need to look at the bigger picture.
Right, the overall market sentiment.
Yeah, and that seems to be a bit more hesitant.
Do you think that's because of those financial ups and downs we talked about?
Yeah, I think that's a big part of it.
Makes sense.
Investors get nervous when a company's financials are all over the place, especially when there's a lot of debt.
Right.
But there are also some positive signs.
Oh, like what?
Well, that patent they just got for their railcar inspection tech.
Right.
And that big deal with Fortress Investment Group, the $42 million one.
Yeah.
That's generated some excitement.
So it's kind of a push and pull between the potential of their tech and those financial worries.
Exactly, like a tug of war.
Yeah, and that's probably reflected in the news too, right?
Oh, absolutely. Like you see some good news and then some concerns pop up and it goes back and forth.
So it's a really dynamic situation.
Yeah, you got to watch it closely.
Okay, well, let's shift gears a bit and talk about ownership structure.
Okay.
Understanding who owns the company can give us more insight into their direction and stability.
Absolutely.
So what's the breakdown?
Well, institutional investors have a decent chunk, about 30%.
Okay, so the big players are somewhat involved.
Yeah, and then insider ownership is actually pretty high too, around 26.59%.
And why is that significant?
Well, it usually means that the management team has a lot invested in the company's success.
So they're not just calling the shots, they're also taking the risks.
Exactly. It shows they believe in what they're doing.
Okay, that's a good sign.
But even with a strong management team and some positive signs from the market, we still need a way to evaluate DUOT's overall potential.
Right, we need a framework to make sense of all this information.
Yeah, and one tool we can use is a SWOT analysis.
What analysis?
Yeah. It stands for strengths, weaknesses, opportunities, and threats.
Okay, so it's a way to systematically assess their position.
Exactly.
All right, well, let's do it. Let's dive into DUOT's SWOT analysis.
Okay, so first, their strengths.
What are they doing well?
Well, we've already talked about some of them. Their cutting-edge technology, their patent portfolio, their integrated solutions, and those partnerships with big companies like Dell and NVIDIA.
Right.
These are all major pluses that give them a real edge in the rail tech market.
Yeah, those strengths definitely align with what we've seen so far.
Yeah, but then we have to consider their weaknesses.
And we know their finances are a bit shaky.
That's a big one.
What else?
Well, that volatile financial performance, the high debt, the inconsistent cash flow, those are all major concerns for investors.
Right, they could really hold them back.
Absolutely. They've got to address those if they want to gain investors' trust.
Okay, so those financial hurdles are real.
Yeah, but let's look at the opportunities.
Yeah, where can they go from here?
Well, the future of rail is all about automation and efficiency. And that's a huge opportunity for DUOT to grow their market share and secure some long-term contracts.
So they're in the right place at the right time.
Exactly, but they need to execute.
Right, they got to make it happen.
And they could also expand into new markets beyond just rail.
Oh, interesting, like what?
Well, things like intermodal transportation or even logistics in general.
That's a good idea.
And strategic partnerships or acquisitions could also help them grow.
Yeah, diversify their offerings.
Exactly. But of course, we have to consider the threats too.
Right, what could get in their way?
Well, one big one is regulation. The rail industry is facing a lot of scrutiny, especially after those recent derailments.
Yeah, safety is paramount.
Exactly. And that could mean higher costs for DOT and more operational challenges.
So regulations are a double-edged sword.
They are. And then there's competition.
Oh, right.
Those big tech companies with tons of resources could decide to enter the rail tech market.
And that would be a big challenge for DUOT.
It would be like David and Goliath.
Yeah. But at least DUOT has a head start in this niche.
They do, but they can't afford to get complacent.
Right, technology moves so fast.
Exactly. Someone could come along with even better tech and disrupt the whole industry.
So they got to stay on top of their game.
Absolutely. And then there are the bigger economic trends to consider.
Like what?
Well, things like economic downturns or changes in government spending.
Right. Those things can affect any company.
They can, even the most promising ones.
Yeah.
So you have to factor that in.
Okay, so we've got this SWOT analysis, and it's clear that DOT has a lot of potential, but also some real risks.
Yeah, it's a balanced view.
And it highlights why doing your research is so important
Absolutely.
before you invest in anything.
You got to know what you're getting into.
I completely agree. And speaking of important things, I want to remind our listeners about something. If you're enjoying this deep dive into DUOT, make sure to hit that subscribe button so you don't miss out on future episodes where we break down, these interesting companies and industries.
Absolutely. And just a reminder, we're not giving financial advice here.
Right. This is for informational purposes only.
Exactly.
Yeah.
We're just looking at the research you provided.
Always do your own research.
Yes, always.
Before you invest in anything.
It's so important.
Okay, so before we let you go, we always like to end with a question.
Okay.
Something to think about as you can continue to learn about DUOT.
I like it.
With all those rail incidents, making headlines lately.
Right.
Do you think DUOT's technology could actually become like the standard, the industry standard for safety?
Interesting question.
Or will they get derailed, so to speak,
Right.
by the competition or those financial issues we talked about?
Yeah, I think DOT has the potential to really make a difference when it comes to rail safety, but they have to execute. They have to show that they can innovate and deliver results.
Yeah, and manage those financial challenges.
Absolutely, and navigate all those regulations.
Right. It's a complex landscape.
It is, but it's a story worth following.
Yeah, we'll definitely be watching them.
For sure. And to our listeners, we want to hear your thoughts, too.
Yeah, what do you think about DUOT?
Do you think they'll become a leader in rail safety?
Let us know in the comments.
Yeah, we love to hear from you.
Well, that's all for today's deep dive.
It was a good one.
We'll see you next time for another, exciting journey into the world of business and investing.
Sounds good.